Thank you for making time to review my presentation, a final valuation of UPS versus FedEx for managerial finance. In this analysis, we will discuss the history of both FedEx and UPS, current market conditions of each, and the outlook, final valuation. The following is a brief history of FedEx and UPS, as well as insight into their current market conditions and outlook, to provide one with a foundation to better understand whether each company is worthy of investing in. Per FedEx, in 1965, an undergraduate from Yale University known as Frederick Smith wrote a term paper, laid out the logistical challenges facing pioneering firms in the information technology industry, and discussed how most air freight shippers relied on passenger route systems, but those didn't make economic sense for urgent shipments. In August 1971, Smith was working in Arkansas aviation sales and operating his new firm. He saw firsthand how difficult it was to get packages and other air freight delivered within 1 to 2 days. Stemming from his term paper, Smith then put his idea into reality and therefore became FedEx Express, a company that has revolutionized global business practices and that now defines speed and reliability. With 389 team members, FedEx Express officially began operations in April 1973. On the other hand, in kind of similar story, UPS was born from an idea of another young mind, and it all started with just $100. Per UPS's site, in 1907, two teenage entrepreneurs created what would become the world's largest package delivery service, which started in a Seattle basement with a $100 loan. Claude Ryan and Jim Casey opened the American Messenger Company, known today as the United Parcel Services. Researching and developing an understanding of the company's current market conditions for UPS and FedEx and their outlook is critical for projecting long-term profitability and success, as well as the industry in which organizations operate. Upon review of each FedEx and UPS's marketing conditions, one can see the importance of comparing two organizations to make sure they're buying industry worthy of investment that will be critical in assessing not only the company in which we are considering investing, but also whether or not the industry itself has a sustainable and relevant future. As of March 12, 2022, the following information has been made available and may impact one's final valuation analysis of either company. As it relates to FedEx, this stock has average movements during the day, and with good trading volume, the risk is considered to be medium. During the last day, the stock moved 7.68 between high and low, or 3.61%. For the last week, the stock has had a daily average volatility of 4.63%. As it relates to UPS, this stock is usually traded at a good volume and with minor daily changes. The risk is considered to be low. During the last day, the stock moved 5.46 or 2.68% between high and low. For the last week, the stock has had a daily average volatility of 3.04%. With FedEx's and UPS's wavering stock, both present negative signals. However, from FedEx's Q2 of 2022 earnings call transcript, one can learn that to start, they had an outstanding Cyber Week with 100 million packages picked up during the first official week of peak. They are strategically adding more capacity across their network to support our growing customer base. For example, at FedEx Ground, this means adding 14.4 million square feet to their network, the equivalent of 300 football fields since June of this year. In quarter two alone, they brought online 24 major expansion projects, with 9 of them starting operations in November, just weeks before peak. While it is important that these facilities were up and running to add to a capacity in time for peak, experience tells us that they will operate with increasing efficiency in weeks and months ahead. We also learn of a few market cons for UPS from Global Market Insight. UPS market size exceeded USD 10 billion in 2021 and anticipated to grow at a CAGR of 6% between 2022 and 2028. The market demand is attributed to growing adoption of cloud computing solutions. This leads to a rise in the construction of hyperscale data centers in the market, which require advanced UPS. In determining whether or not to invest in FedEx or UPS, understanding financial strength is of utmost importance. This following provides an analysis of consolidated financial statements for 2021, 2020, and 2019 for both FedEx and UPS. From these, we can see how each company is trending over time. Both FedEx and UPS compared will help to identify which company is most worthy of an investment to maximize a return on investment, ROI. We will evaluate trend analysis, various ratios, provide balance sheet examples, and income statement examples. In evaluating each company, we find that in 2020, UPS had 18% more in consolidated revenue than FedEx, 18% more. From 2018 to 2020, FedEx had a 5% revenue increase, whereas with the same time frame, UPS had a 15% increase. In between 2019 and 2020, FedEx saw a slight revenue decrease, while UPS significantly increased their revenue. We see that they also have a higher increase in expenditures. This is likely due to the salary increases and investments into improvements. Upon review of balance and other statements, one would propose that the company invest in UPS versus FedEx. The United Postal Parcel Services shows that they are investing in making improvements, increasing their labor force, and has had significant year-over-year in revenue increases. If UPS continues to take market share from FedEx, they would definitely be a better investment going forward.